analyst. Nvidia, the big day, Wednesday afternoon also on this name. I don't even know what to say about Nvidia because the darling it has been. Jenny, what are we watching for?
The darling it has been, but not really as much this year. I know we're still outperforming the market this year, but it doesn't feel like we've seen the same degree of Nvidia resiliency. And frankly, this name has buoyed a lot of the overall markets in the better part of the last 2 years. So I think that considering a different shift in tone regarding AI spend, it will be a very interesting quarter. I mean, I think objectively, this is our biggest event to watch of next week. I mean, this is pretty much as big as any type of economic data or Fed announcement or earnings event, really. Nvidia still, I think, is the king. And I think all eyes do remain on its data center business. The company has seen consistent beats. Last quarter's, I will say, was less impressive than that of the prior quarters. And there is still this modest concern about a slowdown in AI and the necessity for the rampant spend, given the fact that DeepSeek has showcased that they can basically operate in a more efficient model as far as just costs are concerned. So like prior quarters, supply constraints are still expected to appear to at least see some degree of a cap on their AI business. The question, though, does remain about their future in AI. What percentage of the AI workloads is now training versus interference? I mean, how are we seeing GPUs ramp? How are we seeing Blackwell fare versus some of the supply chain concerns? I mean, there's a lot of things and questions that NVIDIA definitely has to answer next week, and we'll see if they're able to do so. We do know they're in outstanding financial health. I mean, pretty much as strong as you can really see. As of October of 2024, the company held around $38 billion in cash and investments compared to the $8.5 billion in short-term and long-term debt. I mean, it's a company that is in a solid position to continue to grow. And I think that if you're of a believer in AI and the AI interference and their industry-leading parallel processing, and as well as the continued, hopefully, uptick in PCs and the bottoming of that PC cycle, I think that you'd say things look pretty strong for NVIDIA, especially considering the guidance we've heard from some of its closest peers, like Taiwan Semi, for example, was strong. I know that the space has been turbulent this year, but I still think the fundamentals speak for themselves, and growth is only expected to continue for NVIDIA.
One veteran bull claims that NVIDIA is still as dominant as ever. Louis Navellier, the founder and chairman of Navellier & Associates, stated that NVIDIA has a monopoly on generative AI chips and that no one can compete with them. About $1 billion in assets are managed by his company. Navellier has been hanging on to Nvidia stock since he first bought it in May 2019. His optimism is fueled by the company's cutting-edge semiconductor technology, as well as founder Jensen Huang's outstanding leadership. According to Navellier, you ought to stick on to Nvidia until the end of the decade. The street will continue to follow Nvidia's market-moving earnings announcement following Wednesday, February 26's trading close. Wall Street still sees Nvidia making money from the worldwide expansion of AI infrastructure, even if China-based DeepSeek upended the extremely optimistic AI thesis early this year. The point is highlighted by hyperscalers like Amazon and Meta's aggressive 2025 capital spending projections, which were disclosed during this earnings season. Kate L. Hillo, the chief investment officer at Russell Investments, told me on opening bid that the investment in artificial intelligence is taking place over the next few decades. That being said, there are indications that NVIDIA's earnings release should be viewed with care. Data indicates. Over the last 30 days, NVIDIA's first quarter earnings per share, EPS, trend has slightly decreased. Additionally, it has been almost 60 days since the street updated its 2025 EPS projections for NVIDIA. Currently, NVIDIA is also one of the most inexpensive AI stocks. According to research, NVIDIA is trading at 29 times forward earnings on a forward price-to-earnings PE multiple basis. The values of Marvell Technology and Broadcom are 41 and 35 times, respectively. ARM Holdings has a 72-hour clock. The NVIDIA bulls, however, remain unfazed. Wedbush analyst Dan Ives wrote in a client note on Monday, "We expect another robust performance and clear beat and raise special this week from NVIDIA that should calm the nerves of investors as Jensen Huang lays out the massive demand drivers from Blackwell and AI capex in the field, fueling this fourth industrial revolution." So, what implications does this have for NVIDIA's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on NVIDIA stock in the comments. Your support truly helps us grow. Now, let's get back to the video.
things to increase. I mean, computing power and more. And Jensen Huang really saying and interpreting what happened with DeepSeek and saying we're not looking at things the right way. And there's still a lot of believers in Jensen Huang leading NVIDIA. And you mentioned the 100% year over year. I mean, that's an incredible chart. So let's get to the chart and the technicals. Rick Ducat.
Yes, it has been a pretty epic rally for a while here, but actually quite a bit of moderated growth and more range-bound activity. And we can see that, for starters, the upside ceiling, for the most part, was around 149, this pink line here. We did make some intraday highs beyond that level, but not really any strong closes that had any staying power. We can see also that we had another significant level, this gap, the low point that we had before this most recent gap down on that DeepSeek news here. That was about where we topped out during the past few days, this level right around 142. So a key area to keep an eye on as we head into next week. We can also see our moving averages clustered together once again. In this case, though, the faster one is about to cross above the slower one, which is a sign of potential trend improvement here. But we're not really getting an accompanying breakout in price, so I would kind of beware of jumping to conclusions based on that alone. Now we can also see our green line here. 130 was a series of highs and then subsequent low points here, so a potentially supportive area to consider as well. RSI a little bit more bullish. We saw very heavy volume during that DeepSeek decline, but the ship has mostly been righted. The gap has been filled, but we're just not making a push back into this old territory to the upside. We are right in the thick of our nearest volume node, near about 138 or so. So this is another key level to hold. But as I said, 142 and 149 are some levels to the upside. To the downside, 134 and 130 really stand out.
After the bell on Wednesday, Nvidia will release its much-awaited fourth-quarter earnings. Investors and analysts will be concentrating on the company's revenue from its potent Blackwell chip line, as well as how the AI behemoth is handling the prospect of additional export restrictions on its processor shipments to China and the imminence of tariffs. Nvidia continues to hold its position as the industry leader in AI chips. Silicon Valley and beyond are envious of its processors, yet its rivals have yet to surpass its performance edge. Nvidia is receiving a portion of the billions of dollars that large tech giants like Amazon, Google, Meta, and Microsoft are spending to expand their AI data centers. However, the giant of graphics processing is also facing a number of difficulties, such customers turning into competitors. Additionally, over time, consumers may be persuaded to buy less costly chips by increasingly effective AI models, such as those created by DeepSeek. According to Bloomberg's consensus projections, Wall Street is expecting earnings per share, EPS, of $0.84 on revenue of $38.2 billion for the quarter. Compared to the same time last year, that would indicate a 73% rise in revenue and a 63% increase in EPS. Any other business would welcome that kind of expansion, but investors would find it disappointing. We're talking about a company that saw revenue surge 265% and EPS soar 486% in Q4 of last year, after all. The majority of Nvidia's income is expected to come from its data center business, which is expected to reach $34 billion by the end of the quarter, while gaming is expected to bring in $3 billion. The company's OEM, automotive, and professional visualization segments will provide for the remaining revenue. Wall Street is observing. As of right now, the company's shares are flat. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now let's dive into today's video.
How are you feeling about the market, particularly on a day where it's risk off? You see a lot of selling happening and people are running to the safe havens. What do you think?
I don't think this is any different than the volatility we've seen so far in 2025. This is going to be the story for this year. So I think really on a day like today, there have been a lot of people very bearish this month that have not participated in this market. This gives them a second chance to get into some of these names that have sold off from their highs. We're still not that far off from the all-time high. So to me, today is just a buying opportunity for those that have missed the run so far this year, because I think the setup for March and April is going to be pretty good.
Right, understood. I know you have a few names that you own and sectors that you own because there are certain themes that seem to be working, right?
That's exactly right. And one of our main theses going into March as to why we think it's going to be a pretty strong market for the riskier assets is I think when we get this inflation data that we're going to get for the month of February that'll be reported in March is going to show a moderation in inflation. I don't think that trend will last all year, but the market will react to that news that's just for this month. And I think that's going to be very positive because that's going to put rate cuts back on the table in the bond market. It's going to keep the 10-year under 4.7. And because so many people are bearish, they're going to be forced, in my opinion, to buy. And I think you're going to see names like Nvidia and Meta and Amazon and those types of discretionary names that are also getting beat up today could go significantly higher and catch a bid. We put cash to work again today, and we're now pretty much fully invested for the most part. We have moves that we can make if we get more surprises post NVIDIA earnings. But February is the buy the dip month to set yourself up for a strong March and April.
You think NVIDIA earnings are going to help the market, hurt the market, or be some sort of moment in time?
So we told our clients today, we sent out a video to clients today and said, we have no idea how that market's going to react to NVIDIA. We know it's going to move it in a big way, one way or another, but it'll be a 1 or 2 day event. Our thesis on NVIDIA is if we think the S&P is going to go to 63 or maybe 6,500 in the coming months, which is what we think will happen, that name is such a big percentage of the overall indexes. It's really hard mathematically to think of a market that's going to go to highs and not take the most important name with it. So we could see revenue growth slow. To me and NVIDIA, the biggest thing is going to be on the earnings call. They're going to have to answer the DeepSeek question. And if they knock it out of the park, you could see that name go ahead and take off and go ahead and finally break that 150 barrier that seems to be a resistance level for that stock.
With Alphabet, the parent company of Google, down 5%, Amazon down 1%, Microsoft down 3%, and Apple down 4%, big tech has had a rough start to the year. With shares up 14%, Meta is the only outlier in the group. Since China's DeepSeek destroyed $600 billion from Nvidia's market capitalization in late January and sent shares of AI businesses down, this will be the company's first quarterly report. Investors at the time were concerned that DeepSeek's assertions that it created such a potent model with less than ideal NVIDIA chips would spell the death of the company's more potent processors. However, NVIDIA CEO Jensen Huang argued that the opposite was true in an interview with DDN CEO Alex Buzari. This is due to the fact that models such as DeepSeek's perform better when run on powerful processors. As Huang explains, DeepSeek's models encourage businesses to invest more in high-end CPUs rather than deterring them from purchasing the finest. The possibility that President Trump could impose taxes on chips imported from Taiwan is another danger NVIDIA faces. TSMC, which manufactures a large number of such chips in Taiwan, collaborates with NVIDIA to develop its CPUs. Additionally, Trump has threatened to impose additional export restrictions on NVIDIA chips that are headed for China, which would reduce the company's earnings there. Of NVIDIA's $35 billion in sales in Q3, $14.8 billion came from the U.S., which accounts for the majority of the company's revenue. However, with $5.4 billion in revenue, China ranked as the company's third largest market, behind Singapore's $7.6 billion. The impact of Amazon, Google, Microsoft, and Meta utilizing their own proprietary AI chips instead of NVIDIA's has also drawn criticism from Wall Street. The idea is that those companies won't need to rely on NVIDIA's products if their chips can perform as well as NVIDIA's. 50% of NVIDIA's data center revenue in Q3 comes from cloud service providers like Amazon, Google, and Microsoft. NVIDIA's financial results would be greatly impacted by any threat to that. However, Joseph Moore, an analyst at Morgan Stanley Research, warned against overreacting to the promise of these application-specific integrated circuits, or ASICs. After years of experimenting with 2025 NVIDIA alternatives, the majority of which were unsuccessful, Moore writes, we saw initial enthusiasm based on price and potential performance, which brought an initial deployment. The alternatives are then put on hold, often never to be returned, and there is virtually always a tug back to Nvidia, which has the most developed ecosystem. Although processors from Google and Amazon have so far defied that rule, Moore claims that Nvidia is still gaining ground in the AI market. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.